Hello and welcome to today's live webinar where we look at opportunities in review for the ASX. We've had some feedback from clients saying that the live webinar buffers, or you may have problems with the video delivery. If that's the case, we'll be emailing the webinar out after the event, and the feedback is the quality of the webinar in the emailed version may be better, or definitely is better. So that's just some feedback if you're finding the streaming is not adequate as we go through today's presentation. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Moving straight into a graph of the XJO. Now, the format for today's presentation, I'll chat a little bit about the global backdrop within equity markets. We'll then go through the recent signals. We'll identify sort of the high conviction group of stocks that we're focusing on following the recent signals and blog posts, and then we'll have a check of the recent additions to the model portfolios. So just to set the scene on the global backdrop, emerging markets have been the area where selling's occurred this year. So you've seen emerging markets, and in particular of late, the Asian markets, and we'll have a look at a couple of ETFs for those where they've sold off quite heavily. That's partly because the US dollar's been strong. So as the US dollar's rallied, we see emerging markets which carry debt denominated in US dollars. That debt becomes more expensive to pay back in a higher US dollar environment, and that's weighed on emerging markets. The other point of interest is yields have flattened. So if you think about it was only a month ago that US raised interest rates, yet the bond market is saying that global growth's not going to pick up fast enough for the long end of the yield curve to rise. And as we go through some stocks today, the relevance of that point is yield sensitive names, so real estate investment trusts, infrastructure, so on, have actually rallied because the long end of the interest rate curve has stayed low or moved lower. S&P 500, just a point of note, is flat for this year. The NASDAQ, I've just got a note here just to remind you that the FANG stocks, so Facebook, Amazon, Netflix, Google, and so forth, they're trading at 120 times forward earnings. So from a PE standpoint, those top technology stocks in the US are very expensive, and there's some rumblings in the market about them being susceptible to a pullback. And then in today's recording, we'll focus on the ASX stocks, which ones are expensive and which ones are good value. So up on screen, here's a graph of the XJO. I've got our market trading at about 16 times forward earnings, which is fair value. We've got some pockets that in consumer staples and industrial companies that are up over 20 times earnings, which are looking a little bit stretched. And then obviously the energy and resource names have been doing well. So first thing we do, let's jump into the watch list here. And we'll go down and we'll have a look through the recent ASX signals. So click on that. It brings up a list of the signals from the last 7 days. Click on the first one. And let's just start moving through these, and I'll comment on the ones that we're focusing on. So normally what I do, so if you're looking at Leon's charts, which is this marker here, that'll be green on your screen saying show Leon's charts. I normally just put a simple support or resistance in based on where the signal's been, and that's really just to highlight to me as I'm toggling through the charts the levels that I'm keeping an eye on, how price behaves. Some of these stocks I don't cover, and therefore within these I'll sort of stay focused on the names that I cover mainly within the top 50 or top 100, and not so much pushing out to the stocks that sit in sort of the top 200. So Amcor, just reminding you that this stock was added to the ASX top 20 last week. It's a stock that was sitting in our model portfolio, and it was removed because of this lower high formation. If we have a look at the pattern here, really for the last say 3 years, Amcor's bumped along sideways, and we've had this sell from the lower high. From a pure fundamental standpoint, the concern with Amcor is they're not growing earnings at the moment, but I think that's a bit of an anomaly across the next 6 to 12 months, but the company will return to 5 to 10% earnings growth. And so what we look for at the moment following the algorithm engine is maybe the stock bumps sideways, and if we see a higher low formation over the next 6 months and an algorithm buy signal, you'd want to look at adding Amcor to the portfolio. So any pullback from here, I suspect, is only going to be modest on the downside. ANZ, it's worth just having a look at what's happening here in the Aussie banks. Certainly loan growth is slowing, and I think the banks have very little protection for a deterioration in the credit cycle or the quality of credit. ANZ's announced a further $1.5 billion share buyback. So they first announced the first, so in total $3 billion of shares that ANZ's buying back. They've already completed. So if we look in December here, this is where they announced the first $1.5 billion buyback. And granted, this was throughout the Royal Commission, but the buyback really didn't help support the share price. So whilst the market got excited about the announcement of this second buyback, I don't think you can draw a conclusion that just because ANZ is buying back another $1.5 billion that it's necessarily going to underpin the share price. And for the most part, for us, the banks still look expensive and facing some risks around headwinds just generally across their business. This name here, I don't follow it closely, but I've just shuffled a support line up there at around 50 cents. The momentum indicator's turning positive, so it's something you can think about with a stop loss below that level. Not doing here, resistance there, so lower low, lower high. So if you're looking at the short side of this trade, stop loss above that. CSR, now, I think it's natural to sort of give these building stocks a wide berth at the moment, given some level of deterioration in the housing market here in Australia. Certainly in the US, those numbers still remain robust. So CSR and James Hardie have exposure into the US markets. CSR, I think the strategy here is to consider this as an opportunity. I think there's a wide range there. We may see the stock price sort of trade down a little bit lower than where it is at the moment, but for the most part we can see a big volume accumulation here, and I suspect that CSR ends up finding some level of support on a valuation basis. The company just came out and reaffirmed that the next 12 months earnings are going to be about the same as the prior 12 months, and the stock's on a reasonable dividend here, so looking for the stock just to move slightly higher off that oversold level there. One just to think about, stop loss below that support line, not really a company I followed closely. Downer EDI, I think might be worth having giving some thought to this, again with a stop loss below sort of 660, not one of our preferred allocations. Healthscope, I actually don't mind this name. I think there's an opportunity to look to add this into portfolios. The algorithm flagged the higher low formation. You may recall there was some speculation that maybe Wesfarmers may look at a takeover of Healthscope. I think that was partly behind the rally a number of months ago, and I think on this pullback there's a buying opportunity down here, and I just highlight that there's a price gap back to around say 210, so let's get rid of that. So there's the support line off the recent low there of around $2.15, so between 215 and this level here, I think sort of the buy zone there on Healthscope. iShares Asia. So I spoke about at the beginning of the recording that we've had the sell-off in emerging markets and Asian markets, and the main Asian indices are down anywhere between 10 to 20% this year. iShares, this is an ETF that covers the top 50 companies in Asia, and we just flagged that it's now sitting down on support here at around $83. Incitec Pivot, we'd been long this name. It was in the ASX 50 model portfolio, and then as IPL was shifted from the top 50 to the top 100, Delivered a total return of about 7.5%. So it was originally added to the model when it switched from this sell signal to a buy signal here, and then with the recent sell signal on Friday, it was removed from the model. I just highlight that there's a price gap here in Incitec back up to 374. So whether it rolls over from today, but our concern here is that it's making lower lows, lower highs, and we've had the algorithm sell signal there on Incitec. Oz Minerals, so just flagging higher low formation here in Oz Minerals. Prior signals have performed very well. It's one of the better performing stocks in the model portfolio. So Oz Minerals is mainly copper. So it's gone from a sell condition here into a buy condition at around 364. If we look at the performance of the subsequent buy signals, they've all done a pretty good job of picking up sort of the entry into the higher low formations, and we've just got another reminder here that similar patterns developing at a low of $9.30, so you may want to think about a stop loss at $9 there on Oz Minerals. Just moving through a couple of these names that we don't cover. So Qantas. Qantas, again, one of the better performing stocks in the model portfolio. It shifted from sell conditions into buy conditions originally at around $5. The stock's now trading $6.15, and we've had another algorithm buy signal just recently, just last week. So if we have a look at the momentum indicators, still slightly negative, but as we watch for that to turn positive, shuffling the support line up and staying long the trade on the basis that the momentum carries forward, and think about stop losses below that support level there in Qantas. South 32, we can see the history here is that it was added into the model portfolio originally back in 2017, and it was one of the better performing stocks that was closed out a number of months ago. It delivered, I think, from memory, around about a 50% return, and we can check that when we look at the model portfolios. It was only excluded from the model for a short while, so it was sold there at around 360, and it was added back into the model at around 350. So when we think about South 32, the momentum indicators turning positive, so you give this the benefit of the doubt that the uptrend's continuing. And for the moment, the resources still seems to be an area of the market that is subject to earnings upgrades, and we're still seeing commodity prices well supported. If we see the US dollar start to pull back a little bit from recent highs, that should be a net positive for commodities as well. So keep an eye on South 32. Centre Group, so this is an example of that yield-sensitive names that have done well. Not South 32, I should say, Centre Group, Australian, the old Westfield division of the Australian shopping centres in Australia and New Zealand. The stock now trades on a 5% dividend yield, 3% earnings growth. I think it's pretty close to full value where it is at the moment. Nothing there. Seven Group holding. So if we just have a look at the history here of the algorithm signal, switched from sell conditions to buy conditions. It was originally added into the model there at $5, and we continue to have the bullish price structure and just another confirmation of a higher low developing here at around sort of say $18 to $19 range. So the momentum indicator is still a little bit negative, so it might be something where you just watch for that to turn positive and look for that momentum to continue higher. Trade Me, not doing there at the moment. This is interesting, not one that I follow closely, but the algorithm sell signal's done a good job here of highlighting that the structure's breaking down into a lower low, lower high, flagged the high at $13, and now that's sold off $12.52. And there we are. So that's just looking at the signals over the last 7 days. So just to point out what we did there, we clicked on watch list, we went into here and went down to the recent signals, and that stores the signals from the last 7 days. A feature that we haven't covered in prior weeks has been the recent blog posts. So this contains the last 30 days of stocks that we've posted on the blog. So let's just click on that and we'll have a scroll through these and see which ones we're drawing our attention towards. So clicking on Amcor, so I've largely covered that. ANZ, we had a look at that. So for the moment, it appears that the lower low, lower high pattern is probably going to win out there in the banks. APA Group, now this was a infrastructure stock that's had a takeover bid from one of China's wealthiest families, and the takeover price is $11. So the reason why it's probably trading below that takeover price is just because some risks around FIRB approval, but the risks for that probably seem fairly low, I suspect. So there may be an opportunity to think about owning the stock and looking to deliver at $11 under the takeover bid if you're willing to back that that's going to proceed. BHP, we've seen oil prices just come off a little bit in the last few hours, which I think is weighing on BHP. But still, when you consider oil up at around $70 a barrel, iron ore being strong, the prospect of BHP getting a better outcome for their sale of their onshore oil assets in the US, I think BHP, to me, fair value is between $29 and sort of $35 on the absolute upside. For clients that still hold BHP, we're selling tight covered calls over this. We're just trying to strip out the upcoming dividend and collect another $1 or $1.50 of call option income. I don't think there's too much more upside in BHP. A lot of good news is priced in, but I suspect the downside's fairly limited as well. Bank of Queensland, lower low, lower high. If we have a look at the last sell signal here at $13, these regional banks have really been hit very hard. And if you go back sort of 2 years, on average, they're down about 30–40% from their highs. The regional banks have issues with rising funding costs and in an environment where they have the headwinds in lower loan growth. And I think it's pretty hard to build a case to get too bullish or optimistic about the regional banks. So for the moment, we just recognise that it's under an algorithm sell signal and assume that that's still pushing lower. CBA is one of the few banks that still has an algorithm buy condition in place on it, and it's really trading pretty much in line where it was originally added to the model portfolio. And we assume that it's bumping sideways. Now, Semuc Group, we started buying this stock last week. It was one that I've been highlighting on the Monday recordings, that it's a high conviction buy. It just looked like it was getting oversold. You may recall that Semuc acquired, first of all, just to be clear, Semuc's the old Leighton's business. You may recall not long ago they acquired UGL, and that whole infrastructure business that now includes UGL is doing a terrific job winning a significant amount of contracts. And Semuc down here, the price has corrected back to a reasonable multiple, and I think the low's in now for Semuc, and we probably see that stock continue to trade higher from where it is. CSR, add this to your radar. I think this is now on sort of the high conviction list and looking for it to form a bottom at around this 450, 460 range. Caltex, we've started to take profit on this. We think it's getting up to the top end of the valuation range. We had a $32 target on it, which has been the message we've been writing about on the blog. And you could either think about taking profit or selling covered call options to enhance the income there. CYB, they acquired, so this is the spin-off from NAB, Clydesdale Bank, listed in the UK. Big transactions taken place where Clydesdale has acquired Virgin Money. Virgin Money represents about 30% equity now in CYB, but I think it's a bit of a game changer for CYB, and that's a stock that we've traded it from low levels, taken profit here, but we continue to watch this. I think the stock does well. We may find around March, when the Brexit is likely to proceed, that maybe there's some selling pressure in CYB, and that's going to be March next year. But it might be an opportunity to have a look at an algorithm buy signal if we see it around that point in time. So I think the longer-term fundamentals bode well following the acquisition of Virgin Money. GPT Group, 5% yield, sort of 4-5% underlying earnings growth. It's one of these yield-sensitive names. We've seen a rebound in it, but it's pretty full value here. I think you sell a tight covered call to complement the return there. GPT went ex-dividend at the end last week as well, so just to point that out. Healthscope, add this to the high conviction list, somewhere between sort of that 210 and 220 level. I think it finds support and you get a rally over the coming months. So that's one that we'll continue to revisit. Incitec we've covered. So again, what we're doing at the moment is any stock in the last 30 days that Todd or myself have posted on the blog, we're toggling through that list of 30 days of stocks. So James Hardie, beneficiary of strong US housing market, but James Hardie does trade on a high PE multiple. The market's looking for earnings growth in high teens, but at around $24, I think the stock's full value. So we've been buying it off this algorithm signal here, but we're going to look at selling the $23.50 to $24 call option to enhance the return on that. We don't think it trades too much above that. Link Administration Holdings, I think keep this one on the watch list. This is a high conviction buy idea. Anywhere down on any pullback in price, I think there's an opportunity to add that. It's more of a longer term hold. I think the fundamentals for the company bode well over the long term. Mirvac, a little bit cautious here on residential apartments. Medibank Private, I like this. I think there's a place for this in portfolios. The upside's fairly limited, but we're running this as an income line for portfolio, so buying it and selling the covered calls and stripping out the upcoming dividend. I think the downside risks are fairly low for Medibank. Newcrest, so we're just mindful that it's under an algorithm sell signal, but if we have a look at the history here on Newcrest, it's been bumping sideways now for about 2 to 3 years. More often than not, when you get a technical pattern where it enters a consolidation phase from an uptrend, it will often leave in a continuation of that uptrend. So it's certainly required a bit of patience when you look at the pattern here. It is under an algorithm sell, so we look for confirmation of the next algorithm buy, but it may end up being a stock that sort of into 2019 we start to see a new uptrend emerge, so we'll continue to watch that. Now, some of these smaller gold companies have done very well. They've been under algorithm buy signals. So an example here, North Star, it was originally added to the model where it switched from this sell condition to the buy condition here. And if we look at the performance of the subsequent signals, they've done quite a good job of picking up the higher low formations. We've recently just taken profit on North Star, but obviously the challenge with the algorithm model is to determine whether you hold into these stocks for the long term or whether you sort of trade them and take smaller profits along the way. Oil Search, so this was a switch from sell conditions here into a buy conditions, and the stock's been one of the better performing stocks. So if you think about the names that have been added to the model this year, Oil Search was one of them, was added to the top 50 model. So was Santos. So when we conclude with a review of the model portfolios, we'll just check to see how they're performing. Oz Minerals, so this is one you can add to your watch list. This was recently triggered under an algorithm buy signal last Friday. If we go back to the history of it, when it switched from sell to buy, it was originally added to the model. It's done very well. If we look at the subsequent signals, they've picked up good higher-low formations, and I think it's reasonable to think that around this 924, given the sell-off that copper prices have had, that we may see a bounce in Oz from around these levels. Qantas we've chatted about. QB Insurance, so this has been a perennial underperformer, lower lows, lower highs, and we've seen a number of these sell signals do a good job of flagging the lower high formation. The most recent one here was around $10.50, and the stock's moved lower. But some of these names that have underperformed for a number of years could very well become the better performing stocks over the next sort of 2 to 5 years. So we just need to sort of occasionally look back at some of these names and be mindful that over the next 6 or 12 months, if we start to see algorithm buy signals in some of these companies that have been in long-term downtrends, we want to capture the early part of that recovery as they may become some of the better performing stocks over the medium term. Ramsey Healthcare. So our view here on Ramsey is that the stock just got too expensive. It was trading up at around $83, and the yield had compressed to below 2% at that point in time. We now have a lower high formation in place, so it's a counter trend trade, but you can see there that I've marked out if we saw the stock down at around $50, it would be pushing back up near a 3% dividend yield. The company's reaffirmed earnings growth of 5%, which is less than the market had expected. The market was looking for 8% earnings growth, but it might be one worth just keeping an eye on. I think at around $50, the stock's looking oversold. South 32, a little like Oz Minerals, some of these commodity plays, at first pass, you might sort of go, well, look, the uptrends are getting a little mature and there's too much risk. But the way to manage that is to think about running a stop loss below the recent higher low formation there. And again, we just look at those shorter term momentum indicators being positive there in South 32. Star Entertainment. Now, this is one of the stocks that certainly sits on our high conviction list. I think the stock presents great value down here. The market has not taken kindly to the cost overruns with the Queen Street Wharf casino up in Brisbane that's being built. The overrun was something in the order of around $600 million. Star Entertainment offset that by bringing in new capital. They raised $410 million at $5.30 a share only about a month ago. So that was their Chinese partners that put in the money at $5.30. Obviously, issuing new shares has a dilutionary effect on the share price, and the share price fell away a little, but I think the upcoming August earnings result should appease the market, and I'd expect to see Star do better. Also an argument with the low Aussie dollar at 73 cents, tourism, so inbound numbers to Australia and the attractiveness of as a tourist destination with the Aussie dollar being low at the margin should be a positive for Star as well as Crown. So we can see the stock pushing higher today. So we like this, and we've been accumulating Star, and I urge you to add that one to the high conviction list. Spark, I think this is a yield-sensitive name at around $2.30. I think might be getting a little bit oversold. Should be a beneficiary of that takeover in APA Group just from a market sentiment standpoint. I think Spark Infrastructure could trade a little bit higher up to sort of 240 to 245. So that's more of a sort of shorter term trading opportunity. Santos, the company came out and reaffirmed that they're going to reinstate their dividend policy. And from the guidance that's been given, the August dividend yield, if it stays the same into March next year, puts Santos on a 2% dividend yield where it is at the moment. So in the absence of another takeover offer, and you might recall that Santos just knocked back a takeover bid of $7 a share, based on a yield, you would have to say that Santos is looking a little bit expensive, especially combined with oil prices that are probably topping out where they are for the moment. So whilst we like Santos, I think the market was probably looking for a better number on the dividend payout. So I'm just not sure now. I think the 2% yield probably weighs on the upside potential of Santos. The caveat there is if we see the takeover bid lifted from 7 to something higher, then obviously the stock's going to rally. But in the absence of that takeover bid being increased, I think sort of at a 2% yield, Santos mainly bumps sideways now. Super retail, we're just mindful of the lower high pattern that was developing here. A rally back and around $9. We've seen the stock start to sell off a little bit there. Suncorp probably getting a little bit expensive up here, so not doing there at the moment. Sydney Airport, so these yield names rallied back, but back up against resistance. So Sydney just went ex-dividend last week, so I'm more inclined to think it bumps sideways and you'd want to be selling tight covered calls over it. Now Tabcorp, this sits on our high conviction list, so please add that one to your notes. I think Tabcorp's upcoming August earnings result, it may come out last week of July. I think that will go a long way to excite the market about what the new company looks like, given that Tabcorp's merged with Tats. This will be the first result where we see a full 6 months of financials with the integrated business, and I think the commentary out of the management and the board will be quite bullish, so looking for that to rally off the back of the July earnings result there. Transurban, yield sensitive name, went ex-dividend last week, recovered the dividend, trading on around about a 4.75% dividend yield. I think if you own it, you want to be selling tight covered calls over it. Telstra, if you're not aware, Telstra's separating the businesses. They'll have infrastructure and retail. They're doing this internally over the next 2 years. I don't think we'll see it separated out as two separate listed ASX businesses until 2020, 2021. And at the moment, it's still under sell conditions, but I think this becomes a stock that we're probably in the early stages of seeing a low being put in. We will, over the next 12 months, maybe start to see a higher low and a buy signal, and it very well may set up for a much longer term uptrend over a 2 to 5 year period that you'd want to be getting in early when that higher low formation begins to form. Treasury Wines, a little bit cautious here on a PE valuation. We had the last buy signal down here at around 14.75. Woodside Petroleum looking a little bit expensive, and then back to the index. So what we did there again is we went watch list and we just toggled through the recent signals that have been added, or the recent commentary on the blog. Now what I want to do just to finish with today is go into the model portfolio and have a look at what stocks have recently been added. So we'll move through these fairly quickly. So let's start with the top 20. And the way I like to look at this is to go days held. So the most recent stock added here was only 7 days ago, South 32. So I should be having to think about, do I own that in my portfolio, and is that a name that I want to add? Already the stock's up 2.2% from the algo signal. Looking past that, 144 days ago, CBA was added. It's about flat. And then interesting, out of 20 stocks at the moment, I think we might have 8 stocks that are in the model, so 12 stocks not making the grade. If we go to the top 50 and just see what's happening there, let's go days held. So again, South 32, recent addition, James Hardie, which we had a look at. Computer Share, been in there 89 days, that's up 8%. And these were added earlier in the year, Santos and Oil Search, and they're up considerably from those entry points. Let's move on to the top 100 and just see what was added. South 32, Dow, which we had a look at that was down our EDI, so I'll just click on that code and go into the charts. And we can see there that that was a recent addition there at around 670, and the stock's moving a little bit higher. Now to jump back, I just click on the model portfolio button and we're back to where we were. So moving Healthscope, that was one that we looked at, so that's on the list. CSR, I've covered that today. James Hardy, we had a look at that. Computer share, I think, is a little bit expensive at the moment, so we're not in Harvey Norman. We're avoiding that. Star Entertainment, I've covered that one, and that's certainly on the high conviction list. Tabcorp, I've covered that. That's on the high conviction list. Santos, we like, just maybe wait for it to consolidate a bit more. I think, in light of that dividend announcement, it maybe moves sideways, and oil prices being reasonably full value at the moment. CBA, if we're holding any bank stocks, we give CBA the benefit of the doubt. I think strong balance sheet always wins out in an environment where credit quality deteriorates or they remain under pressure. It's the best of breed. So I think if you're going to have banking exposure, you want to question why you wouldn't have CBA and you'd be holding the others. Bluescope Steel, so let's just click on this and have a quick look at what's happening here. So we've had a series of higher low formations here in Bluescope. The last signal's done well. If we look when it was added, it shifted from sell conditions to buy conditions. So if we jump back into the model portfolio and have a look at Bluescope, so it was added to the model in February this year at $14. It's up 23%, including dividends. And then we go down. So that's the way that I recommend you think about the model portfolio, is checking the days held. You may also like to have a look at it from a percentage standpoint and go, well, what stocks can I buy at lower valuations than when the algorithm triggered it? And the worst performing stocks in the portfolio, AMP, and I think there is some upside value here in AMP buying at these levels. Likewise with Fortescue, I think that is undervalued, and the August earnings result should be more positive for the market. Harvey Norman's less excited about. MFG, so this is Magellan Group. So a lot of these financial funds management companies have been under pressure, and I think they're probably ready for a little bit of a relief rally from where they are at the moment, but not looking for them to take out new highs. So that might be something that you just keep an eye on there with some of these financial companies, or funds management companies, I should say. So that's the current portfolio. Another way to look at this is just to go down the page and have a look at recently closed positions. So if we have a look, Harvey Norman was closed out. Let's just get this in sell date. So what I've done there is just get the most recent date to the top of the page. So all these columns along here, you can sort in ascending or descending order. So if we have a look, IPL, which was in the top 100 model, now you would have been emailed a reminder last week to say this is removed. If you didn't, if you go back up the top of the page, this envelope, if it's grey, it means you're not on the mailing list for the changes to that model. If it's green, obviously you are going to get emailed. So you can go through each of those models and choose which ones you want notifications on just by selecting those and then making sure that the envelope's green. So if we go back down to where we were, IPL, 7% gain. Amcor was a kind of break even. IOF was a 55% gain. And so you can check sort of some of the performance of the more recent signals that have been closed out. All right, so to recap, let's just have a look at some of the stocks that hopefully you've made a note about from today's webinar. So Tabcorp, we like this. August earnings results, the catalyst. Semuc, we think this business is oversold down here, and we would be surprised to see it trade back through $40. Healthscope, I think this is oversold, and you want to be looking at buying it between $2.10 and $2.20. From a technical analysis standpoint, it's not unusual for prices to fill pricing gaps, which is why I've put that support line there a little bit lower. But you may think about adding some shares here and then adding a few more at the bottom of that support channel there. Medibank Private, now this is an income stock for portfolios. I think downside risks are limited. Buy it, sell covered calls, and you're getting 10 to 12% cash flow plus the franking credits out of it. A little bit riskier, the Oz Minerals, but we've had the sell-off in copper prices and commodities continue to move higher. So this would be a name you could think about, but you'd want to run a stop loss. Ramsey Healthcare, been out of favour. Counter trend trade. I don't comment on many counter trend trades, but I think it's a higher quality asset that Ramsey Healthcare has, and there will be a capitulation point where the market bails on this stock, and I think maybe $50 is the point that you want to look at adding that into your portfolio. Star Entertainment, I think the market's got too negative on this, and there's upside in that, back up to maybe $5.50. Spark, we may see this move a little bit higher following the APA deal. Low interest rates globally could see the stock back over $2.40, $2.45. Just to revisit this one, Dulux, this was a signal that we had a few weeks back. The stock has moved a little bit higher since then, and I think the history of the performance of these algorithm signals have been very good on Dulux, and it does still have a higher high, higher low pattern. But you probably just need to be cautious if it trades back down below $7.40. Downer EDI, I think it's worth having a look at this. And again, just be a little bit cautious if it trades back below that sort of 670 level. Let's just have a look at Rio and BHP. So Rio, we had the algorithm buy signal here at $73, and we've got another higher low formation. So if we come across here, select segment, draw the line, and then drag it into position. I think it's worth just thinking about Rio and the support above $80 there. BHP. Same with BHP. I think support here at around $31.80. Buying it here and selling the $35 call and stripping out the upcoming dividend of 60 cents plus getting another $1.30 odd of call option income, and assume that BHP mostly bumps sideways where it is at the moment. All right, thank you for listening in to today's recording. I think we've covered the high conviction ideas that we're focusing on, and please continue to read the blog each morning as we cover and revisit these ideas that make up the allocations in portfolios at the moment. Thank you for listening in.